if you've got any chance of being in New York City on May 24th, I want you right now to go to bzawards.com. It's the Benzinga FinTech Awards. We're going to be there recording live from the event. Phenomenal event. Come and drink some Pappy with us. I'm bringing a bottle of Pappy. And I want to see you. I want to hang out. bzawards.com. If you're going to be in New York City, May 24th, want to see you there.
There's a smart new website that will change the way you invest using social media.
Likefolio.
Here to explain,
A team of brothers, Andy and Landon Swan.
of Likefolio.
And they've always been building out great technology at the intersection of social and trading.
Powered by unique social data. Analyzed by legendary traders. The Likefolio broadcast starts right now.
Complete destruction in the retail sector. Brick and mortar stores are getting demolished. Macy's is down about, it's about 30% over the last couple of months since mid-March.
Macy's just reported earnings yesterday.
Terrible.
And yeah, they got slapped from, let's call it 37 down to 31-ish.
Yeah. And that's after a drop from 45 to that 37.
It's big.
So, but it's a theme we've been seeing and talking about for a while. Inside of the Likefolio data, what we're seeing is people are just talking less and less about these stores because they're just not going as much, which is a big problem. Secondly, they're talking a little bit more negatively about them every time we check in on, the Macy's of the world, JCPenney's, all these types of, I guess you call them department stores,
yeah,
especially, or, also stores like, single brand, fashion stores, like Victoria's Secret, Abercrombie, all these types of stores. Less and less people are talking about going to them. And when they do, they're talking more negatively about their experience.
Think about it. When was the last time you went somewhere other than a grocery store?
Never.
I honestly, I'm sitting here thinking, I guess I went to a Lululemon store like 3 weeks ago,
Yeah.
but it was to exchange an online order.
Yeah. Yeah.
That's the only reason I went. I walked in the mall and walked out of the mall as fast as I could.
Yeah. I think maybe I'll run into a Target store once every blue moon to get like some gum.
Sure.
Or something like that. But nothing that I'm putting any thought into spending money on.
Exactly.
So, there's two kind of themes here of this show today because we want to stay on retail, because of what's going on in the market and because, the data from social media, the social data is so clear. Department stores especially, I think, are on life support here. There's been a major negative shift in consumer sentiment from just as recently as the fourth quarter of last year. There was like this little bright spot that people thought something good might be going on with department stores like JCPenney and others in the fourth quarter because they put up some decent numbers compared to the very negative expectations that people had. But since then, in Q1, especially late in Q1, and now that we're into May, a lot of April and into May, first 2 quarters so far, we've seen a major negative shift in consumer sentiment for department stores. Macy's, JCPenney, even Nordstrom.
I was just going to ask about Nordstrom because we were bullish on Nordstrom prior to last quarter's earnings.
Yeah, which worked out, but I think that Nordstrom, the social data there has definitely slipped even since then. So it's not immune. It's better than the rest.
Yeah. Well, it's better than the rest because they've been positioning themselves so much better from an online perspective.
Yeah, that's true. And and it's just a little higher end.
It is.
I think it's just a little, it's less coupon-y. So it's a little bit more immune to the big shift that's going on. So we're kind of seeing these department stores sentiment dropping steadily over the last 60 days to basically all-time lows. which is really not good. And then you combine that with what I would call quickly eroding numbers of purchase intent mentions. And, I'd say this drop in consumer sentiment is a clear indication that we will see large declines in same-store sales, company revenues, and, of course, eventually analyst estimates, both near and long-term for these companies. This is not the kind of thing, I don't think, when I look at the social data, it's not the kind of thing that I think resolves itself quickly.
Sure.
This is not like a news event where people are negative about, the wages that people are being paid at these stores or some sort of, sales practice that they didn't like. This is like normal business slipping away and consumers getting more and more negative about the normal business of these companies.
Yeah, we're seeing a total paradigm shift.
Total paradigm shift. In fact, one of the things we've been harping on, both to institutional clients, to the media, anyone that will listen honestly, is I think that over the last 5 months, so since the turn of the year, I think that when we look back, we're going to see 2016 as the tipping point from physical stores to online shopping. Everyone's known forever that online was better and was taking share from physical stores, but the pace at which people are making that shift now in 2016 is beyond belief. It's way beyond what analysts on Wall Street expect. It's way beyond what these store the management of these stores, these department stores especially, were expecting. They thought they had more time, I think. But this shift has been unbelievable. The pace is accelerating. And, I don't know what the reason is. I don't know if it's just the proliferation of Amazon and Prime memberships and, shipping has gotten so much better and all these things kind of tidal waved. But for some reason.
And I mean, it's a combination of what you just said and so many more people being comfortable with shopping online. These older folks that
Yep.
were typically keeping these department stores alive are now shifting to online sales. I mean, my mom is a great example of that. She didn't trust going online, but now she does. She's online shopping all the time. A lot more people have this technology at their fingertips.
Mobile.
The mobile stuff has gotten so much better,
That's a
so
great
much
point.
easier to utilize for even me. I mean, people that are
Yeah, you
high
don't
tech
even
like
have
you and
to.
I.
Now you don't even have to sit down at your computer to shop online.
Exactly.
That's a really big point.
You can be on the train on your way home if you're in a big city, and you'd be like, you know what? I'm gonna buy this, and this off the Amazon app real quick.
Yeah,
Or, whatever.
and it'll be here tomorrow.
It's
It's
just
no big deal.
too easy not to go to a store.
Yeah, exactly. And I think, I know why. I mean, obviously I understand why people prefer shopping online and why that shift is occurring. What I'm still trying to figure out is why, for some reason, from the beginning of 2016 till now, the pace of that shift has increased exponentially to a point that I really don't think anyone can comprehend. From the data that we're seeing, the amount of people talking about buying on Amazon is going through the roof, and the amount of people talking about buying at JCPenney's, Macy's, or Nordstrom is falling off a cliff, like in tandem.
Yeah, you're right. It's pretty crazy. The Amazon fire spreading.
Yeah.
And I think it's just like exponential word of mouth type situation.
Yeah.
It's just spreading like wildfire. Awareness of what Amazon really brings to the table. I mean, you and I have known this for a long time, but not everybody else knew that with Amazon Prime, you can get free Prime shipping plus these instant video access that's as good or maybe better than Netflix, starting to be a little bit better. Free Prime music. You get all these benefits, same day shipping coming, nothing but positive stuff across the board from consumers that are purchasing off Amazon as far as their overall experience. It's just a huge win.
Yeah. It is a huge win.
So I think it's an awareness tidal wave that's hitting shore right now.
So I think Amazon is obviously the huge winner of this shift.
Oh man, all-time highs.
Without a doubt. And something we've been preaching since I think it was at like 510 or something like that.
It was, I think it was 520. It was when I was on vacation.
Yeah.
But I remember you guys selling the 500 puts.
Now we're at 720, something like that.
720.
Wow, 200 points.
I personally think that the battle to the first $1 trillion company is between Amazon and Google.
I agree.
At this point.
I agree.
I mean, Facebook maybe gets a nod, but Amazon and Google, and I think it's going to be Amazon.
Yeah, it's between those two. Other winners, I think, out of this big paradigm shift, the big tipping point from bricks to clicks, are new players like Stitch Fix.
Bricks to clicks.
Bricks
I like
to
that,
clicks.
man. I like that.
It's a tipping point, man.
I think we just found a title for this podcast.
Yes, bricks to clicks. And just to add another rhyme, this startups like Stitch Fix.
Never heard of them.
That's surprising to me because literally 70% of the women in my age group that I know are subscribed to Stitch Fix. They send you 5 outfits every couple months where this, like, supposedly your personal designer is putting together an outfit, pants, shirt, a necklace,
So it's like
a couple
Trunk
things.
Trunk Club. Was
Yeah,
for men.
yeah, like that stuff. And they send you these clothes, and they, it's $300 or $250, whatever the cost of the clothes are, and you can send back what you don't like.
Yep.
And then the other winner, I think, out of this
What's the ticker for Stitch Fix?
it's not public.
Oh, okay.
Yeah, it's kind of a startup, but they are.
That's right. You just said so.
They're disrupting, the business of a Macy's or of a Nordstrom Rack. I think.
Well, Nordstrom, for example, didn't they buy that Trunk Club?
Yeah, they've got
So-
that. They've got some stuff.
They're being smart.
They're being
They
smart,
understand.
and so is Target. That's the other one I have on my winners list because Target, their online experience is really good. They do a good job of tying it into their store experience, and so they get it. They see what's going on, and I think they're anticipating it well. So I kind of put Target as the kind of lower level of the winners list.
Just FYI, ticker symbol for Nordstrom is JWN. Ticker symbol for Target is TGT.
That's right. And then, of course, the big losers we've already talked about. Fossil, other fashion brand type retailers. Fossil just getting absolutely destroyed, I think, by Fitbit, to be honest. I think that people are buying watches right now. People are buying watches based on function rather than fashion. And Fitbit's just like everywhere. And buying this new watch or, this Fossil brand stuff, it's really probably not that high of a, I don't know what percentage of sales watches is for Fossil. I assume it's pretty high.
It's got to be super high.
Super high, like way up there.
I can probably find out.
Yeah,
but
let's check that out.
I think
Because I'm just flying off the seat of my pants here on this Fitbit call, but I think
it's not showing the percentage revenue, unfortunately. But I think you make a good argument there as far as like low end cheap watches being completely replaced by functional watches. But I do still think there's a really big spot for, the high end handmade watches.
Oh yeah.
Like the
Yeah.
Patek Philippe and Audemars Piguets and
Yeah, where you're showing off.
Jacob
I mean,
Cultures and all that.
where it's a status thing.
Mhm.
I think that will always be valid. I like the high. So the high end is winning. The low end is losing in pretty much all these conversations that we're having.
Yeah.
Nordstrom's doing better than JCPenney.
Yes, absolutely.
Rolex isn't losing sleep over Fitbit,
Nope.
but Fossil is. And then JCPenney and all department stores, that rounds up my losers list for today. So, Nick, do you have any of these retailers, either winner or loser? Do you see opportunities in the market that we could take some action on if we wanted to?
I see instant action opportunity in Nordstrom, which
Okay.
we've talked about already. They're reporting after the bell today, actually.
Okay.
And the implied volatility levels are extremely high. Going into this earnings event, the stock is right at 45 roughly. And that's been, a multi-year low for the stock. So I was initially going to suggest selling puts because we had been bullish in the past, but I didn't realize that the data had shifted so far into the bearish territory in the overall retail sector. So I guess my question to you would be, have you looked at Nordstrom specifically in the past week or two?
I have. It slipped, but I was comparing it to the other, the JCPenney's and the Macy's.
It's superior to those guys.
It's superior to those. And I think
but is it bullish?
It's not bullish.
Okay.
But it's not nearly as bearish as probably what the options are pricing in. My guess is if the options are priced, if the puts are expensive and they're and there's a lot of implied volatility. My guess is that after the parade of destruction that has occurred prior to Nordstrom, has pulled Nordstrom down to $45 and is making people really scared going into this earnings event. So I like your strategy. I would go, a little further out than probably the expected move, and maybe sell some puts. Do you see an opportunity to do something like that?
That's the reason I like it, is because the expected move is so much bigger than normal for Nordstrom. It's 10%.
Really?
Generally with Nordstrom, I've seen, 3 to 5% as kind of the average. I've seen as high as 7-8. 10% is pretty high based on my memory, what I recollect going into earnings events. So that's a big expected move, which is why I think it's at least a decent opportunity to potentially sell some puts here. I think the June 37.5 set around selling about 50 cents per contract.
Nice.
So the June 37.5 puts, I like the idea of selling that. That gets you about 1.5 times outside the expected move. So you're looking at 15-16% cushion. It has to drop another 15-16%.
It's already down
from this extremely low, battered level.
It's already down. Retailers have already been crushed.
Personally, I'd be okay with owning Nordstrom at 37.
You could deal with it.
I could deal with it.
You could deal with it.
Especially since it's kind of the leader of our pack here of awfulness.
Yeah.
It's the best of the worst, man.
Yeah. I mean, it's not like this isn't one I'm going to go in and buy, 5,000 shares of.
No.
Because I think it's breaking out and it's awesome. But there's an opportunity to kind of go against the grain.
I do want to touch on Amazon because we've been bullish on Amazon for a while, and I continue to be aggressively bullish even at these levels. It's making new all-time highs here. It pushed above 700, which has been a major resistance level for it. It's a huge psychological level. If this thing, it's at 720. I mean, if you want to be greedy and wait for it to dip back down to 700 and see how it reacts, you can be greedy, but I don't care. And I think, and I don't care. I'm cool with getting bullish here. So Amazon's a great example of a stock where you can really benefit from utilizing options because it's so expensive.
Okay.
So, I just like buying in around the money, like 700 to 730 call spread.
How much is that?
I haven't built it yet, but I'm guessing it's going to be somewhere around $10.
Yeah, that would work. I think I like that play. I think that a lot of people tend to get scared when stocks hit new all-time highs. They don't want to be the last one to buy. Mm-hmm. But when a company's so great, I mean, imagine all the times you could have bought Netflix, Amazon, Google at new all-time highs over the past 5 to 10 years. You would be a very rich man.
Well, I mean, here's the thing. The market cap is $340 billion right now for Amazon, which is a lot of money. And the price to earnings ratio is super high, which scares a lot of people away. But it's always been super high. And if you look at the fact that they just keep on reinvesting into their infrastructure, like I said, I think this is easily going to be the first, it's going to be $1 trillion company, I think. Whether it's the first one to be $1 trillion, I don't know, but it's going to be $1 trillion company. So we're looking at $600 million more worth of growth till it gets to that 1T. It's going to be a multi-trillion-dollar company here.
Yeah, that's a $2,100 stock price or $2,000 stock price.
Serious growth in the stock price. So I'm willing to wait out, any waves in the near term.
Yeah,
I'd love to just buy it long term. I don't really see any leaps that I like, any of the long term options, and I don't necessarily want to put any more of my capital towards the shares of the stock. Gotcha. So I like the idea of just a little like midterm call spread.
Yeah, just continue to roll those. I think you're going to win more than you lose. I think that I'll go ahead and say right now, I believe that within the next 18 months, we're going to see Amazon at $1,000 a share and one of these major historical department stores go belly up within the next 18 months. I think that's kind of the takeaway of the big tipping point shift. That
any prediction on specifically which one of the major department stores goes bellies up?
No, because I haven't actually looked into, and it's not my area of expertise to get into which ones have the best, debt ratios and all those kind of things that come into play when a company starts, a company of that size and that level of inventory and that amount of real estate. I don't know enough about that business to predict which one. I just can see from Likefolio's social data, I can see that they're losing customers faster than they can handle. Period.
I feel like it has to be JCPenney.
I don't know why it wouldn't be, but I don't want to go out on the limb again because
I get it.
I just don't. I don't know the business that well.
I get it.
But I know it's not good. Like, I don't know your business very well, dude, but I know it's not good.
Sure. I
know when there's nobody's. I don't have to know about making lemonade to know that if nobody's standing there buying lemonade, you got a bad stand. Mm-hmm. You know what I'm saying? So I think. Actually, I kind of want to just stick with that for the show today.
It's good information.
Yeah, I think, and it's actionable. I think that people can take away from this. There's still opportunity in retail. There's been a major downdraft. We talked about, Macy's losing almost 30% of its value over the last 60 days. About, the data is really showing all this bearishness in terms of how consumers are going to react and the shift that's going on. But there's still opportunity to do a bullish trade on Nordstrom going into earnings because you can just go against the grain a little bit. The options are pricing in craziness. Mm-hmm. And so we're going to sell the 37.5 puts, June 37.5 puts on Nordstrom going into earnings.
For 50 cents.
For 50 cents a piece, that's such a great price.
$50 a contract if they expire worthless.
Yeah. Just make $50. I'm just going to do one, for $50.
Or really, actually, there'll be some theta. If the stock stays where it is or goes up a little bit, we'll see that volatility collapse after earnings. And all the Vega or volatility premium will come out of those options, but there'll still be some theta left. So I think if we could cover it at 15, 20 cents, make, $30, $35, then that's a win. Overnight. Yeah, and I think with Amazon, you're on the right track. I think that pretty much we could kind of commit ourselves to a bullish spread, just kind of rolling that over the course of the next 6 months until this shift changes. We got the stock at all-time highs. Let's hit a bullish spread every 30, 45 days, stay out a little bit so we have some time to make it right, but I really like that idea too. The 700, 730, something like that. Yeah, or even 750. I mean, it just depends on how wide you want to get, how much you want to risk.
Yeah.
You can tighten it up. You can widen it. There's a lot of opportunity.
So those two, and then the others, Macy's, JCPenney, those types, even Fossil, even though it's so beaten up. I think that the story is, if you see any bounce in those, or if you start to see, media talking about a turnaround again, then that's when it's time. Let's check with the Likefolio data again. Let's see if that's actually happening. Because if it's not,
you got into that.
Yeah,
puppy.
You got another chance at profiting off of this major shift and this major trend.
I feel like Fossil's name says it all.
This is a dead dinosaur.
It sure is. It's gone.
It's we won't even be able to use them for carbon fuel anymore because we're going to have these electric cars and solar cities and all this stuff. They're just completely worthless.
They really are.
So we're going to watch those. No shift in social data, but if there's a shift in the stock price upwards or in expectations for some reason, and we get a divergence opportunity in those, that will be sweet. That'll be at least 2 to 6 months away, but it's something to keep an eye on.
Absolutely.
So we got some trades to do. We're going to have a good weekend. I hope you do too. Make sure you are following us at Likefolio on Twitter. Get the app from the App Store. Just search either App Store, Google or iPhone for Likefolio. Get that app and make sure you're subscribed to get Likefolio updates from your favorite podcasting service because we love having listeners. The audience is growing. We've got cool stuff going on, and glad to have you on the ride with us. So hit us up anytime. Have a great weekend.